Hi everyone, Block Journal here today with Matthew Roszak and Condron. Thanks for joining us today.
Thank you for having us.
Thanks. So we're here at the capital in Singapore, CoinMarketCap's first conference. What do you guys each think so far of the conference?
Love it. Learned about Bitcoin here in Singapore in 2011, so this city is very special to me. And it's great to be in a town like Singapore where there's a lot more regulatory clarity, there's a lot more activity than certainly certain parts of the U.S. So coming here is a breath of fresh air.
How often do you venture towards Asia?
I've been coming here for 15 years, so Singapore is probably my second most traveled city. I love the food, the architecture, and certainly the business climate for crypto doesn't hurt. So you come from a background in private equity and venture capital. What was the catalyst that made you take the leap into blockchain? Because you've been in this space for quite some time now. I mean, being in the venture business is like being in the fashion industry. Like every 2 weeks, 2 months, 2 years, you're into something new. Right? It's the next new kind of trend or thing, whether it's early internet or cloud or social gaming or et cetera. I think that's what makes it so exciting on certain times. But then when you come across something like Bitcoin and crypto, it kind of stops you in your tracks. And you're like, wait, this is something profound, something special, and very different at this intersection of finance and tech and society and all these different dimensions of Bitcoin and crypto. And with that moment that I had in 2011, 2012, I stopped investing in other areas, exclusively focused on crypto, blockchain, and these networks that are unfolding in front of us. And so, which is unique. There's people that's continue to invest in other areas of AI and cloud and you name it, but this space to me was I felt like a generational opportunity for entrepreneurs and investors, and I don't see any stoppage to that over any time from here.
That's good to hear. Ryan, may we ask what was your first point coming in touch with blockchain in this whole industry?
Yeah, so I got in late 2012. My buddy came to me and told me about this thing called Bitcoin, and I thought he was absolutely crazy. I was super skeptical. The more I started reading about it and studying it, I was just absolutely captivated by the idea of mining. The fact that we could actually be a part of the ecosystem, the transaction processing. So quickly started building out projects in the mining space, built my own mining rigs. We launched a site called CoinWars in early 2013. Quickly became kind of the CoinMarketCap before CoinMarketCap. We were the information hub for all the miners. Started launching mining pools and other projects in the space. Then I came on board and started working with Matt in 2016 with Bloq. And then just last year we spun off Titan, which is focused still in the mining space.
Great. So for those who don't know, Ryan is the CEO of Titan, one of the companies under Bloq Labs. So Ryan and Matthew both gave a talk yesterday at the conference. The talk was titled "The Future of Mining: The Evolution of Hashpower." Do you think you guys could give the viewers a little bit of a recap of your talk?
Yeah, so Bloq is organized in two different ways. Bloq Enterprise, where we sell infrastructure software, and then Bloq Labs, where we build new tokenized platforms and applications. And one of the key areas for us has always been mining, but mining has always been a tough, capital-intensive business. So when I met Ryan in the early days of our conversation, we were always thinking about these software layers, these network layers within mining. And after Ryan came on board last year, we started building Titan and Stealth, and then announced it coming out of Stealth here at the Binance conference in January of this year, and have been kind of building ever since. But the premise of Titan has always been how to make mining more efficient, make miners a lot more smarter as the complexity of mining and the institutionalization of mining continues to unfold. They need better software, management software, to make certain decisions on their operations. And so the software component will lend itself to opening up other doors like a marketplace and a protocol, which I'll have Ryan describe. But from a Bloq Lab standpoint, partnering with great entrepreneurs and kind of supporting a vision and providing the capital, the IP, and the kind of energy and resources is what Bloq Labs likes to do.
Yeah, and so from just being in the mining space and seeing the evolution of the software in the space, or lack thereof, has been a little disappointing. So having a chance to partner with Bloq and to actually build good mining software has just been an awesome opportunity. I love the ingenuity of the space and the different protocols and what everyone is building, but the amount of tech that's been going into the mining space on the software side has been very lacking. So the vision with Titan is just to make mining as easy as possible at any scale. From there is we're going to be launching a marketplace for the buying and selling of Hashpower at a global scale. And then from there, kind of the final stop on the flight path is launching our protocol. So the idea of the protocol is keeping hash rate distribution decentralized. We see a lot of talk in the mining ecosystem around centralization around pools, centralization around facilities. At Titan, we really believe that if we can decentralize the control of the hashing power through greater accessibility to even just consumers or investors or institutions where they can acquire hashing power, if we can decentralize the control of the hashing power, then we can keep the networks safeguarded around centralization. So that's the vision around the protocol, and we're really excited to be working on the space.
Understood. So how do you, with the, from what I know about mining, there's some very large mining pools, especially based out of China too. What specific paths do you guys are you guys going to take to combat against these giant mining pools? From what I hear, you guys are going for more retail or consumer side mining to get more hash rate there, right? Against these mining pools. What specific routes are you going to take to combat this?
The initial go-to-market is actually going to be more institutional, large miners that are mining at scale. And I think over time, providing an entree for consumers and like toasters to participate in the mining. I'm not being funny, but mining needs to be more decentralized. When we look at pools right now, they're more partners than anything else. And we've been having lots of great conversations with the top 5 mining pools, and continue to find ways where they see value in Titan to provide more stable hash power to their pools.
Great. So I'd like to shift the conversation a little bit towards markets now. So first I'd like to ask Matthew, what do you think are some of the factors that brought crypto on this stage in 2017 that caused such a massive bull run?
Well, we had a massive Cambrian explosion of tokens, right? And some were good, some were, a lot were not. Look at CoinMarketCap's got 300 or 3,000 line items today. Back then, I think it was maybe 1,000. And so you have this proliferation, but you kind of distill all that down. And what I think is very important for this space, and we're losing a little bit of that, is capital formation. Meaning I have a project, a network, and this is how I'm going to raise capital to bootstrap this network. And I think that function, that premise is incredibly powerful. That's not going anywhere. The ICO craze, the shitcoins, the bad projects, the tourists are going to continue to get exhausted out of this market, and the real players, real builders that are demonstrating progress are going to continue to get rewarded in terms of capital, volume, price, etc.
I've spoken with many people about the proliferation of so many tokens, especially in 2017. And some people think there will be more tokens in the future. Some people think there will be less. From your point of view, from people we've talked to, or just in daily work, do you feel that there's been more projects coming up or less?
Well, I think the notion of the tokenization of things is going to continue to be a profound element. It's just a superior business model when you have a digital cooperative where you contribute a certain resource and then you participate in how that is sold and managed. Take a distributed computing dynamic where you provide compute power to this network, and then you share in the value of that as people buy more, and that value is realized in that token. So that business model, that the genie is out of the bottle. That'll continue to happen, and there'll be people that get it right, some people that get it wrong. But I think from a business model standpoint, it's super powerful, and that's why I'm in this space. It's another genre is the tokenization of real world assets. You're seeing all the stuff on STOs and everything else. and that is looking to tokenize, $600 trillion of the assets that we know: real estate, gold, barrels of oil, whatever. And that's great, and I think it will create new efficiencies from liquidity, price discovery, all that, new infrastructure, wallets, custody, exchanges for that, and that's great. And those are existing assets, existing markets. What inspires me is all this new stuff, and so tokenized networks and ICOs, now IEOs, or token generation events, etc. They're going to continue to morph and find different acronyms in different ways. But providing capital, energy, sunlight, water to these networks is really important. And the good ones will always surface. It's like you look at the early internet, early railroads, early telephony. You always had a lot of people jumping on these opportunities, taking advantage of the opportunities. But the market tends to always kind of feather all that out over time.
You have to remember, too, 2017 was actually the second explosion, right? The first one was actually 2013, and 2012, 2013, when people started just forking the heck out of Bitcoin. So we see Litecoin come on, we see Purecoin, we see all these different iterations of the technology. And what people were doing with each of those projects is they were tweaking it. They were testing different block sizes, different block times, different feature sets, different anonymity layers. They were testing the technology to see how far it could go, what we could do with it. We had everything from Bill Murray coin to Lotto coin to, whatever, pop up, through 2013, 2014, 2016, 2017. It just became this feeding frenzy when all of a sudden we see the price of Bitcoin coming up. You see more institutional money coming in. And then people start realizing, wow, it's free money. So everyone in their, what they say, two guys and a dog in a white paper. Yeah, will launch a project and will raise $60 million overnight. So we see this crazy feeding frenzy, and I think a lot of that has gotten shaken out over the past year and a half. But human psychology is consistent. We're going to see it again, just in a different form. There's still a lot more room in the space for more money to flow in. We're just very early in the technology, and even with something like Titan, we're launching our own token. We are creating a new design for a network node because all the current nodes and current projects don't have the technology that the mining ecosystem needs to build what we need to build. So even in our case, it's new technology, iteration on what's currently out there to facilitate the tokenization of Hashpower. We'll see tokenization of assets. We'll see more non-fungible tokens being tied to real-world assets. We'll see ways to digitize private or public key stamps on real-world assets in order to track them in a tokenized economy. But we're so early in the space that we're going to see some really cool stuff in the next couple of years.
So hundreds of thousands, maybe even millions of tokens. Yeah. Everything from affinity tokens to the bar of gold to tokenized Hashpower to you name it.
And then the real magic is going to be the interconnecting of all these tokens into a real usable, real world application.
Ryan, you mentioned these new developments coming up, especially since 2013. I'd actually like to ask you, what are your thoughts on proof of stake? Because proof of stake has been I think it was invented around then, but it's recently been a hot topic more very last year or so.
Hot topic. Yeah. No, okay. I am not so yes, I'm in the mining space, but I am not 100% gung ho proof of work only. There are a lot of amazing ideas out there around consensus algorithms. Eventually we could have proof of movement with accelerometers in our phone. We could have all sorts of different types of proofs. Proof of stake is just simply tying up potential, just like proof of work is. So at the end of the day, you have to sacrifice value and potential in order to slow down block production to secure a network. So at the very core root, proof of work and proof of stake are actually very similar in what they're doing. They do it in very different ways, obviously. I will say the inherent problem with proof of stake is distribution. You have to have money or know somebody to get involved in the network, where proof of work is you have to have hardware hash power to get involved in the network. So proof of work actually has a way better flight path for distributing their coins or tokens. Proof of stake has to do IEO, ICO, some type of initial distribution, and then try to protect itself from centralization of control by a too large amount of capital from one person. So there's some inherent issues with proof of stake, but all in all, I think both models can work, and I don't think we're going to. I will say though, for the foreseeable future, proof of work is still going to be prominent, and that's mainly because people follow the money, right? And if you can make money with proof of work because you have a little toaster that prints money for you, that's going to keep driving security on proof of work networks. So until the staking incentive gets better, we're going to see predominantly proof of work networks.
Yeah, and I'd agree. I think the distribution piece on proof of stake is we're still in the early days, between EOS and Tezos and Polkadot and all these proof of stake networks that a lot of people are excited about, still have a long way to deliver on the promise of the governance dynamics and, certain folks that have buckets of those tokens control a lot of what happens in terms of governance.
Great. I think thank you guys for both sharing your insight on proof of stake. It's something I've been personally looking at a lot recently. I think it's a cool concept, and I just wanted to hear what you guys thought about it. Let's talk a little bit more about investing from the investment point of view. Matthew, I want to ask you, what's your investment philosophy when it comes to looking at cryptocurrency blockchain mining companies?
Early days, the rationale was a lot easier. It was a early group of pioneers, hackers, pirates in the space, building out wallets, exchanges, payment processors, software layers in this space, and so I invested in about 25 different infrastructure companies like that. So everything from Binance to Coinbase to Kraken to BTC China back in the day. Now, seeing some of the infrastructure, you have incumbents now. So if there's a new exchange coming, it's like, well, how are you going to compete with Binance? If there's a new mining company, how are you going to compete with, Bitmain? And so the landscape's a lot different now. The competition, the metrics to make an investment decision are way different versus back then, which is, I think, core to venture. It was a phenomenal entrepreneur with, a good soul and an amazing business plan, and you want to back that all day long. Today, the market's more competitive, so based on that heat map that you see, you start looking at white spaces, like what hasn't been thought through. It's like one of the reasons why we, kind of obsess on mining and the stuff we're doing at Titan, because there's a massive white space here that we're pursuing and building on. But venture in this space is super interesting. The earliest days, when I first learned about Bitcoin and the whole blockchain ecosystem, I went back to Sand Hill Road to a lot of the investors that invested in a lot of my companies back in the day, and they were like, we don't understand this, we don't get it. And their LP documents prohibited them from actually investing in crypto back in the day. And right now, they've changed all the LP agreements, because back in the day you were prohibited from investing in oil and gas, real estate, and currencies, and et cetera, because you're supposed to do your job and invest in venture stuff. And so a lot of LP docs have been changed to allow for crypto. And so we're still, we're seeing a few big venture firms like Andreessen or USB, et cetera, but most of Silicon Valley is still devoid of crypto. They may be testing they're dipping a toe in the water on blockchain stuff, but still devoid of a broader, more, I would say, impressive crypto strategy coming out of Sand Hill Road. So what spawned was the advent of crypto funds and native crypto funds, which kind of started with this investment thesis, understand it, and continue to deploy capital. So I think it's still very early. The amount of institutional capital in crypto is still tiny and needs to grow. Going back to the capital formation standpoint, and some of the speculation in the space is a very positive thing to kind of create that capital formation and that kind of return profile that venture investors want, and the liquidity on top of that. So it's got a lot of benefits to what traditional ventures should look for, but are kind of now hesitant because of some of the regulatory dynamics, some of the 2017-18 crash dynamics, and trying to figure out what their bite is going to be and their thesis in the space.
Great, thanks for sharing that. Now that you've talked a little bit about how you look at other companies what makes you invest, looking at the founders, the companies, their business plans. Let's flip it around a little bit. What are the advantages you offer to companies that make you different or stand out from other investors?
I've been in this space for a long time, and so I kind of prided myself on doing everything I say I'm going to do, which is important, and then creating this network around myself where, trying to be in a position where everything is like a one phone call away, and having access to exchanges, wallets, law firms, compliance, all those things that most entrepreneurs, have a good core skill set on what they want to do in terms of I want to build this, but all those kind of ancillary pieces you don't expect an entrepreneur to have, and so being able to solve that for them and kind of cut to the chase and get a clearer line of sight on building out their business, getting to market faster, is a really big deal. And so, the network that I bring is something that I'm very fortunate to have built over the last half decade, and that's available to the people that I back and invest in.
Great. Ryan, do you think you could share some experience about how it's been working with Matthew?
Yes, I can. It's honestly, the only word that comes to mind is blessed at this point. So I actually proposed a white paper. It was a Bitcoin scaling solution to Matt in 2016. I sent it to him. I was like, hey, can I get your feedback on this? And, him and Jeff ended up reading it and bringing me on board as a principal engineer at Bloq because of it. And ever since then, it's just, I have learned so much just in regards to everything from biz dev to working with a team to where to eat when traveling. When
Gotta eat.
You gotta eat. And when Matt says that he curates and he surrounds himself with good people, it's really true. There are a lot of amazing people in this space, and one common thread I've seen around in the entire space with all the amazing, authentic, genuine, nice people is they're all somehow linked to Matt. Somehow. So it's been a phenomenal journey so far. Yeah.
Great. So you guys started. If you're looking to work with someone, consider working with Matt. So let's talk a little bit about expand the conversation a little bit towards global politics and the regulatory environment. So both of you must know that China's President Xi Jinping last month announced to the Chinese public and to the world that blockchain would be a core development of China's future. And immediately the government started to move on it with subsidies and investments towards blockchain-related projects. But also they specifically mentioned that it'll be coinless projects. What are each of your thoughts towards this and how it'll impact the whole industry? We'll start with Matthew.
I think it's fantastic. I think it's great news to see a head of state say something like that. I wish Trump had a national action plan for blockchain, which we proposed to them. I also serve as chairman of the Chamber of Digital Commerce. And so having a head of state push and promote and advocate for this technology is a massive win for I'll say blockchain and crypto. And I'll talk about why crypto. And there's a lot of complexities as you get into this regulated payments, banking, and securities, commodities ecosystem in any country, whether in China or the U.S. But having that push from the top is super important because then every agency, everything else tries to figure it out based on that proclamation. And China did that, and that's fantastic. The way I look at blockchain is they're railroads, and when you say blockchain devoid of a token, devoid of crypto, it's like saying an intranet. Early days of internet, people did not jump on the internet. They built intranets to say that, okay, the three of us trust each other. We're going to share documents or messages because we're all known parties on this rail that we built called an intranet. As we got more comfortable, we're like, wow, this is great. Let's expand this to our partners, suppliers, customers, and we built an extranet. We expanded it outside of the three of us. And then pretty soon the font of innovation on the open internet was so good that we're like, we can't keep up with the stuff that's getting built on this internet, so let's just migrate to the internet. And you saw that with some stutter steps, people saying, well, I don't want to go to the cloud, and now cloud is ubiquitous, and you can't justify doing building your own data center in many ways because it's just it's cost prohibitive based on what you pay AWS or Azure or Google Cloud. And so the same dynamics are happening here. People are building blockchains, intranets basically, to say, hey, let's create this shared services rail and save some cost and make things more efficient. I also look at these rails that if you don't have a boxcar on it, in terms of a token, and you don't have an incentive structure, it's not that interesting to me. I think blockchains and having this kind of way to share information and have visibility, transparency in certain business systems and business workflows is fantastic. Although I think the opportunity to create these net new digital cooperatives that have incentives, so again, a rail with a boxcar, a token, is by far more interesting to me. And I think President Xi's proclamation will be training wheels and will be a catalyst for that future. It won't just stop at blockchain. It'll catalyze more towards these tokenized networks over time.
I would say it's been confusing to watch over the years. And so in 2013, we saw some governments come out like super early and say either like absolutely no to blockchain, or they would kind of like embrace it, right? I think I could be wrong, but I think Nepal was like absolutely no Bitcoin, no crypto. I think Ecuador was like no Bitcoin, no crypto. And then China started taking movements towards kind of that direction, but it wasn't like they came out and said it. They, at first it was, okay, you could own Bitcoin, you could own crypto, and then all of a sudden we see a huge amount of mining, huge amount of exchanges. All the leading exchanges are in China, all leading mining manufacturers, mining facilities, everything. The ecosystem is China-centric. And then all of a sudden we see, okay, exchanging is not an option anymore, and now all exchanges start closing down. And then we start seeing, okay, mining isn't going to be an option, and we start seeing huge amounts of hash power turning off and moving out of China. So the speculation was, China's gearing up to release their own cryptocurrency. It's going to be competing with Bitcoin. They're just basically shutting down the peer-to-peer aspect of it to release their own. It's been confusing, and I'm not close enough to it to be able to say like, this is what the inside baseball scoop of it was. But just from an outward perspective of being a miner looking at it, it's still very timid. Opening a mine in China or running a mine in China, all the biggest mines are still in China. Don't get me wrong, and there's a huge amount of China-centric mining and hardware manufacturing, and everything is still there. But knowing where this is going to go, I think it's fantastic. Just like what Matt said, that the government is now taking a stance that we're pro blockchain. We're going to further this ecosystem because, just like Matt was saying, is the peer-to-peer nature of the way the internet grew. We're going to see the same thing with blockchain. We're going to see this interconnected web of tokenized assets, tokenized data layers, tokenized identity, and being able to draw all this connection together. If a country the size of China doesn't take part in that, then it's going to be like this black hole where the rest of the world is tokenized. So I think it's fantastic that they're coming on board with it. It's just the exact flight path and what that's going to mean on the mining side and the exchange side and the pool side is still wait to see, I guess.
I spend most of my time in China, and I keep quite my finger on the pulse of what's going on there. I think from my point of view, what I saw was especially after Facebook Libra came out, the announcements of what they were doing, talks in the country was we were thinking China's probably going to be keeping up with the digital currency, or at least keep on par with what's going on in the West from the U.S. side. So when you were talking about how you think tokenized assets will continue, blockchain could be the first stepping stone, I think that's true, but it might take a while because, as you both know, China keeps a very strong control on its currency.
I think that's absolutely right, and I think one of the nuanced pieces of China Coin, I'll call it, maybe a direct reaction to seeing Libra on the horizon, but also look at payments in China, right? Between Alipay, WePay. Having an RMB coin will help counterbalance the power that is maintained by those two payment platforms, which is devoid of the central bank of China really having better control. I guess they can control anything that they want in a sense, but putting a RMB coin into those payment rails takes some of that power back to the Chinese government. So I think some of that is very strategic from a monetary policy and a payments and a flow of funds standpoint. And I think I could almost argue that it's too late, but it's China, and so they could command and control certain things and make certain edicts to bring it back into their favor, because it's kind of gotten out of their grasp in this bubble of the WePay, Alipay ecosystem. I think seeing what's happening with Libra, seeing what happened with JP Morgan coin, Wells Fargo coin, and these competitive threats between private money and government money, fiat money, is going to be fantastic. It's going to be a bit crazy for a while between, no, but you can't use this and you have to use this, to really pressure testing central banks and their ability to yield so much power and so much influence and on these money systems. So I think competitive money systems is, I think, long term going to be a good thing. Short term, medium term, it's going to be a rocky road.
I think it's confusing because, to this day in history, I've never had competitive money systems like that. Like there hasn't been the aspect of anyone could fork a chain and create their own currency. So this concept that we have now, capitalist open market dynamics now in actually money generation, I think it's really governments are kind of sitting up straighter and going, well, maybe we should be a little more competitive with the way we do our money generation.
It's really refreshing for me to talk to people who have a strong understanding of what's going on in China, because especially after Xi Jinping made the proclamation, it seemed like there were many people who thought this meant China was allowing Bitcoin, which actually is quite the opposite for now. We could see it evident from the 40% jump in the Bitcoin price that day. I think overall it's a great thing for the whole space. It's a great thing for digital currencies, but we still got quite a long ways to go. So how do you guys think of what you meant? Oh, sorry. Let me rephrase this. You mentioned earlier about you made a joke about Trump not making this kind of statement too. What are your views on the U.S.'s regulatory environment? What's the current state of it?
It's very difficult to operate in this business in the U.S. No question about it. And I joke about this, and I say this half jokingly: is the U.S. is like a flyover town between Switzerland and Singapore, in crypto, because you have the CFTC calling it commodity, SEC calling lots of stuff these days securities, FinCEN a currency, the IRS calls it it's taxed like on a capital gains basis, and so you have all this patchwork and no clarity on the most important piece, which is capital formation and being able to raise money on a tokenized network. And look at the U.S. between Wall Street, Silicon Valley. This is like the birthplace of a lot of that stuff. So on one hand, it's a massively missed opportunity today. On the other hand, this technology moves so fast. And, I think regulators are just finally dusting themselves off of what happened with the 2017-18 kind of ICO explosion. And we're seeing certain enforcement actions take place. And so right now, there's little clarity on how to do stuff. People have to read between the lines on some of these enforcement actions to figure out how to operate and navigate, which is not a good thing. Which then, as an entrepreneur in the space, you wind up going to places like the Cayman Islands or Singapore or Switzerland to launch and build these systems. Not that we want to burn all this all these air miles and kind of go to some of these exotic locations. It's just with the lack of clarity there, you have to go where the jurisdictions allow for that. But I think what's interesting in this space is for the foreseeable future, while there's this lack of clarity, and I've not seen this in tech before, where teams will literally forklift themselves, their families, etc., and just get out of the U.S. and go to Singapore, go to Switzerland. I have a dear friend that's literally moving to Switzerland next month. And this is part of that equation that for the next 10 years of his life, he's like, I don't need to, take quarterly trips to the Caymans or Singapore or whatever. I want to live and operate in this jurisdiction where there's clarity and I could build stuff and build a team and do this from a very purposeful long-term basis.
And I mean, America has an incredible history when it comes to innovation. The Industrial Revolution, the amount of technology that has come out of that country, right? I think Matt said it best as a missed opportunity. Our legislative branch is now becoming reactive to just about everything, and it's knee jerk, it's fearful, it's how do we control this, and it's not a good environment right now. Doesn't mean it can't get better, and it doesn't mean it's not going to get better. It's just right now everyone's looking elsewhere, and it's almost creating a state of paranoia for people that want to innovate. Even from my standpoint, in 2013, we're setting up mining pools. Are we a money transmitter? Are we generating currency? What are we doing? We wanted to launch our own exchange. We actually had the domain. We were starting to write the software. And then we talked to a lawyer, and the question came up, well, what kind of exchange with the currency and blah, blah, blah. Started talking. Well, that's going to open us up to a huge amount of risk, and we ended up actually backing down from a lot of projects simply because of the regulatory issues. We didn't know how to navigate it. And I think we're seeing that throughout the space, is a lot of people have a lot of great ideas, and the headache of trying to do that in the United States just isn't worth it at this point.
And just to put an exclamation point on that, there's 535 members of Congress. This is the oldest Congress in history. I think it's like 68 and a half years old. Part one. Part two is only about 2% of them have any technical degree. And you saw this in full force when Mark Zuckerberg was testifying, and the types of questions they were asking. And so, beyond it being just embarrassing to watch, it just showed you the capacity to understand new tech when, 68-year-olds are not, necessarily using a lot of the modern apps that we have and have less context to that. They have amazing staff, et cetera, but they also have other narratives they want to maintain and kind of promote, which we saw firsthand. But that's the capacity to understand this is part one. Part two is, there's a lot of incumbents. The incumbents in China, look how the RMB coin is going to be distributed again on that draft. I mean, it's going to all the big banks and then some of the tech companies, et cetera. And so I think if there's regulatory clarity that happens in the U.S., I think it'll fall in the same kind of effect where here are the big regulated banks that get the first licenses or the first whatever and gets distributed that way. So there's also regulators tend to favor incumbents that help put them in office. Relationships matter in life and business and politics. And so we're seeing a little bit of that play out as well, as it's played out in a lot of industries going through transitions.
So last thought on that. Just last one is, please. We have technology that's meant to be self-regulated, and we have regulatory bodies trying to regulate a entire technology that was meant to be self-regulated. So inherently, we're just going to see a ton of issues. That's
true. That's true. That's the problem that's been coming up for a while.
Level. It's going to be an issue.
So I see a lot of some similarities between how China and U.S., these two huge players in the space, especially on the regulatory side. First of all, China also had a certain knee-jerk reaction towards this whole industry is hugely popular in 2017 by directly saying no more exchanges, right? Similar to how the U.S. is kind of handling it too, where we maybe, like you said, the members of Congress, they might be older, they might not understand the technology. That's also a similar issue that's happening in China right now, even though they are working towards making strides in blockchain. But a problem is they don't know where to invest this money, what project, how do we look at these projects? Do you think that because the U.S. is still a very important player on the economics in world economy, and also in terms of innovation, not just in blockchain, but also in tech, in Silicon Valley, whether it's software apps, AI technology, all these kinds of different types of technology. Do you think that the U.S. will be quickly changing their ways or views towards how to regulate, or will they be left behind in this space?
No question about it. They will react when certain things come into place. Comprehension, incumbents figure out their strategies, like what is Goldman, Bank of America, Amex, PayPal going to do in this space? What do they want to do in this space? They'll go to Treasury, CFTC, SEC, and say, hey, this is kind of what our vision of the future is. Right now, it's a lot of whippersnapper crypto companies that continue to scale up. This is $250 billion industry today. That's not going to stay at $250 billion forever. So as the speculation, as the market cap, as the size of this market expands, big banks, financial institutions, and then big tech is going to get very ingrained into developing this space, and we'll have no choice but to do that. I think it'll be they won't get it right for a little while, but in the U.S., what I'm confident of is that we're good catcher uppers, which means like we'll give, tax. I mean, in the early days of the internet, there was like tax-free shopping and all that stuff. That was a stimulus to get people to start doing that. And I think similar in this space, free energy for miners, tax-free crypto. I don't know what that will encase, but it'll be at a significant cost to catch up, but we'll catch up.
And it's very expensive when you have leaders that follow. And that's essentially what we have, and not just in America, in several countries where they're reactive rather than proactive, rather than taking time to understand technology and building regulation around that understanding. They're waiting for industry to lead, and then they're going to follow with regulation, which is historically not a very good thing to do.
Well, I do hope the U.S. does catch up quickly, because this type of competition on the world level really does open up a lot of doors for companies in this space. Now that we've talked a little bit about the entire world, let's go back to this $250 billion industry. What are each of your thoughts on the current state of the market? Are we in a bull run, bear run? Are we going stagnant? What's going on?
Well, what's interesting is that we're kind of going through this remaximalization of Bitcoin phase, right? We're seeing Bitcoin at the beginning of the year was 3,000-ish, got up to 12,000, now is at 9,000. And it kind of felt good because it's basically a triple since the beginning of the year. But I think people still have some PTSD, and they're like, well, it's not just an open flow, an open sieve right now, and people are holding on, and then holding on even more based on the halvening that's coming up next year. And so they're kind of saying, like, where is this bull run going to really kick in with the halvening? And if you look at historically, the 6 months pre and then the year after were some of the best years of Bitcoin with those last two halvenings. And so people are waiting for that now, but it's not played into. We're less than 6 months away. We're getting kind of close. People are scratching their heads like, where is the run? Where is this going to happen? I think it's going to happen, maybe a little tighter towards that than normal. And so with that, there's this dynamic we want to hold and maybe start to accumulate Bitcoin leading up into that. And you're seeing a lot of the altcoins, a lot of the other tokens, a lot of the other smart contract protocols depressed. Even though there's a lot of activity there, you have a big announcement that XYZ partnered with this Fortune 500 company, doesn't move it at all. People are sticking to Bitcoin. It's almost 70% of the market, and so we're going through this like kind of freeze frame in crypto over the near term to see what happens with Bitcoin. I think after that, as these protocols continue to show a significant bite of transactions and throughput and usage. And this is my fancy math in the space from this $250 billion to where is it going to go. That usage piece of using blockchains to say, I want to put on my supply chain or do this identity or any of those use cases for blockchain on a public ledger is going to 10x the space. institutional investors coming in, which is right now just a small fraction, will 10x the space. So just that rough cowboy math, that's 100x from where we're sitting today, based on real money coming in and real adoption of the technology.
Yeah. So, will the price go down? Yes. Will the price go up? Yes. Right?
You're going to be right.
I'm going to be right 100% of the time. So the interesting thing is we're still very, very early in the space, right? The value that we have, $250 billion, and we're not really even using the technology yet. The best we're doing is some smart contracts for a decentralized game of chess and CryptoKitty trading, right? We're not using the technology even close to at scale. It's very hobbyist. It's very fringe at this point. So the idea that we've even scratched the surface of value is not even the case yet. As we start, so we're kind of in this investment phase where people are starting to understand the technology. They're starting to realize the value of the technology. Believe it or not, the value of the technology has not changed in 9 years, or 10 years. It's still the same value. It's still the same technology. People are just learning now, right? They've heard about Bitcoin. It has great branding. Great name recognition. I can ask my mom, have you heard of Bitcoin? She's heard of it. Everyone's heard of Bitcoin at this point. Now people are going to get curious. Now people are going to start learning about it. As they start understanding what it is, the fear subsides, and then they want to get involved. And once you start getting people involved, that's going to drive the price up. That's going to drive adoption. But we still haven't gotten to the using it yet. Once we see the using it part, I don't think a bear market or bull market is going to be able to even explain what's going on with the price. The value of the networks that we're building right now, knowing that we're building literally the underlying layer of the future of identity, the future of data security, the future of the next internet, that are all going to be driven off these networks. We're going to wish that we put our entire life savings in at $9,000. Right now the market is very emotional. That's why we have these upswings, we have these downswings. It's literally FOMO left and right. No one wants to miss the upswing, but then no one wants to get caught trying to catch the falling knife. But the reality is this is still a very long-term play. And if we keep that in mind, and we just focus on building the technology, which is what we do at Bloq and with Titan, then 10 years from now, 15 years from now, we're really going to see the magic. So.
I hope so. You mentioned the halving. I think the halving, that's a good point I like to look at. It may not be 6 months prior or 1 year after exactly, because the history of the whole space, let's say 10 years, is still quite a short amount of time. But I do think that halving is definitely very positive because it has its mathematical basis of decreasing the future supply. But with when you mentioned altcoins just now, I want to hear what you guys think about let's operate under the assumption that sometime next year there's a big bull run. Let's say Bitcoin just skyrockets. Do you guys think next time it'll be like 2017 where altcoins kind of almost simultaneously grew with Bitcoin's price? Or do you think this time they're just going to be left in the dust?
I think there's going to be an interrelationship, no question about it. I think the ones that are going to be left in the dust are the ones that shouldn't have been on CoinMarketCap.com in the first place. But you look at the top 10, 20, 50 rails that are listed, and a lot of them are developing apps, are developing community, have a venture fund to support their ecosystems, and they're all in kind of build-out mode. Whether it's some of the more aspiring ones and recent ones, like EOS, which has a lot of capital, or you look at juxtapose that against like Ethereum, which doesn't have a sidecar fund to enamor devs to build on Ethereum, but has the biggest community, the best infrastructure around that. And so, everybody is trying to counterbalance some of those opportunities and deficiencies that they have to go to market and enamor developers. At the end of the day, it's a war against developers and trying to enamor them to build on your particular rail. So I think it's going to be interesting. to see how that develops. Whether you're an Ethereum developer and you're like, well, I'm tribal because I like the Chicago Bulls and he likes the Lakers, and so we're gonna agree to disagree. Or are people going to migrate kind of between these protocols like birds or kind of bees that kind of go from one hive to another, and with these new incentives and maybe it's more multidimensional than that. But I think still humans are humans, and I think Ethereum's got a pretty amazing community. They're going through a lobotomy right now, and they have a lot of work to do there, but they've got a lot of the strategy, a lot of the money, a lot of the big thinkers around it to make that happen. But that's a Herculean task. Can EOS with its pot of money and its kind of initial protocol launch, compete with that? So there's a lot of competition on the EVM space.
So it's really weird because when you look at the altcoins and the technology, I could use Litecoin for everything I use Bitcoin for, right? I could use Ethereum as a cryptocurrency, even though this technically wasn't what it was meant to be. I could use, EOS the same way. If we say, okay, what a rising tide, raises all the boats at the same time, right? And this idea that, Bitcoin goes up, it's going to drag everything else up with it. If Bitcoin goes down, it's going to, everything else goes down with it. We typically see that simply because all the trading pairs on the altcoin exchanges. So you have auto trading bots that are doing arbitrage, and so a lot of that happens just automatically because these coins are so interlinked just in the markets. It doesn't necessarily reflect the value of the utility of the chain, and that's I think right now it's just highly emotional, highly speculative. But for example, like what we saw, Ethereum versus Bitcoin, right? In the run-up in 2017, everyone's like, "Oh, Ethereum's going to take over Bitcoin." Ethereum's like hitting $1,300 a coin, $1,400 a coin. Bitcoin's at 20,000, and there's just a weird flip. And now where we at, it's not even the same ratio anymore. It's completely decoupled. I think it's very, very much emotional at this point. Because you try to rationalize it looking at the tech and you just can't.
Of course. The reason I ask is I think what I've seen is like we'll have these up and downs with Bitcoin, but I realized as Bitcoin goes up, altcoins go down. As Bitcoin goes down, sometimes altcoins go down too. It's just it seems like a bad trend recently of the last few months.
It used to be in sync, but it seems like the more investors that get in the space, the more it's gotten out of sync a lot.
Okay. I'd like to end the interview with one last question. So people talk a lot about the optimistic side of new tech, blockchain, Internet of Things, AI. I don't want to go a little bit darker, more pessimistically. Is there anything about the future of all of this emerging tech that scares you or worries you?
I've had some really interesting conversations about this, actually.
It's a great question. I think the regulatory dynamics are always kind of on the periphery for anybody in this space. You think about the privacy security, like privacy coins, and how are they going to operate? And that's like a feature of how I want to, if I want to send money to a particular charity or a particular cause, I want to do it privately, and I should have full ability to do that. Whether that gets regulated out of existence, can it get regulated out of existence? And then the other dynamic, which is interesting, is like blockchains and can also be used as a kind of a monopolistic dynamic. Meaning, if we're China, India, and Russia, we would probably never get along to do something. But if we built a blockchain to say, let's take on the U.S. dollar. And the three of us have a lot of capacity to actually compete and build a global coin that will do that. I think those are going to be interesting opportunities where even arch enemies will get together to create the volume, liquidity, and dynamism in certain markets, whether it's money or certain industries, and capitalize on that based on what blockchain technology can do. Talk about the transparency and the openness and all that stuff. It also can actually corner markets and create monopolistic markets based on what certain participants do on a blockchain.
Mm-hmm. I'm going to go even deeper down the rabbit hole because we kind of discussed this a little bit the other night. I had a really interesting discussion a couple weeks ago of the right to be forgotten, the right to forget, because we have immutable ledgers where when we put data out there, it's now permanent. You can't change it. And who's to say that's real data, or it's real data, but who's to say it's correct data? Who's to say it's truth? So we're going to have a very interesting thing in the future where if you publish fake news, it's permanent. If you publish a slander or libel or whatever, it's permanent. There's no redacting it. There's no altering it or anything. So this concept of immutable data can get very, very dark very quickly and very dangerous very quickly. So it's going to be interesting.
Yeah, and
for sure.
How society translates that, reputation systems, and the joke we were having is like, this is digital anthropology. It is memorialized, and a lot of that stuff is in there. And then you could even, kind of make a joke about, like in Egypt when they were like hammering and chiseling on the wall, like the pharaoh, and he was, breathing, fire and had, wings. It's like. That was a certain perspective that was drawn, and did that happen? Is that true? Is that But that was memorialized on a wall in a pyramid. So it's kind of interesting to see, like our today's genre of that is fake news, etc. And how do you distinguish what actually happened?
Yeah, so I'd say what scares me about the space, or what I'm concerned about in the space, is we have a lot of responsibility as innovators in the space to be really responsible with what we're building, and to recognize that there's going to be inherent risks like this. That we have data systems that are immutable, that are trustless, that are peer-to-peer. We're going to see things like Twitter looking at blockchain and moving their stuff into blockchain. They're going to quickly realize that, they can't then edit it, and they can't censor it.
Yes.
People love talking about peer-to-peer censor-free data until they're the target of uncensorable data, right? So I just what fears I have is if we miss something, if we don't look at every single angle and make sure that we're building governance correctly with these chains in order to make sure that they stand the test of time.
I agree. That's one of my biggest fears. That's why right now, for me personally, I try to stay off social media unless it's for work-related purposes. It's really scary. It's going to be a scary time in the future. Ryan, Matthew, I wish we had more time to talk. It's been a great talking to you guys, and I wish you guys the best in future endeavors, and I hope we can talk again soon.
Yes,
Thank you.
Thanks for having us.
Thank you.